What's up, everyone? We have a new filing to talk about. This one's pretty big. Confirms a lot of things I've been saying for the last 2 weeks. But anyways, this one is SR NASDAQ 2022-017. Add categories of operational halts. Now, I've tried to record this 3 times, and it's failed to save every time, so I'm not going to blow through this word for word. I'm just going to summarize it for you every slide. So basically, what we're doing here is they're going to be adding in a lot of definitions from the NASDAQ UTP plan, which the NASDAQ UTP plan is basically a plan that consolidates order and trade data from all markets trading NASDAQ listed securities. So this is from the NASDAQ. They're talking about SIP feeds, which is securities information processors. NASDAQ is going to be adding categories of regulatory and operational halts to improve the rule's clarity, adopt defined terms from the amended NASDAQ UTP plan as just mentioned, and delete parts of the rule that are no longer needed. They're also going to be updating cross-references and other rules that are affected by the proposed changes. Now, basically, this rule that we're changing sets forth NASDAQ's authority to halt trading under various circumstances. Went over that. So some background on this. Basically, the exchange has been working with all other SROs, which are the self-regulatory organizations that file these filings. They've been working together with them to implement a standard across all SROs that will help maintain fair and orderly markets by creating similar trading halt procedures. And it's going to basically allow NASDAQ to retain discretion in certain instances as to whether and how to handle halts. So basically, every U.S. listed equity security has its primary listing on a specific stock exchange that is responsible for a number of regulatory functions. These include confirming that the security continues to meet the exchange's listed standards, monitoring trading in that security, and taking action to halt trading in the security when necessary to protect investors. While these core responsibilities remain with the primary listing venue, they're going to be changing one thing that's going to be changing up the definition of a primary listing exchange. So in the event that a primary listing exchange is needed to be called for a decision regarding halting, the primary listing exchange is going to be the exchange on which the security has been listed the longest. So before, it applied in a different manner. Now, it's going to be redefined as the primary listing market means the exchange on which the security has been listed the longest. That venue, wherever the security's been, whether it's on the NYSE, whether it's on the Hong Kong exchange, wherever it's been longest, that's where the decisions will be made for halts. Now, some backgrounds. The trading halt rules are not consistent across SROs. That's why they're doing this. Consequently, events that might not constitute a regulatory halt for securities listed in one primary listing market theoretically might not be grounds for a regulatory halt in securities listed on another primary listing market. Such inconsistency among exchange rules could lead to confusion in circumstances such as a cross-market event, which could be deemed extraordinary market activity. Now, extraordinary market activity encompasses a market event that affects multiple markets. Thus, such cross-market events could be considered extraordinary market activity. Now, proposed changes. They're going to do 3 things. Number 1, they're going to adopt uniform rules regarding the trigger points for regulatory trading halts in situations most likely to have an impact across markets and multiple listing venues. They're going to address more scenarios in the uniform rule where a primary listing market may need to implement a regulatory halt to maintain fair and orderly markets. And 3, add provisions that apply to SIP-related issues to increase transparency into how these situations would be handled. So again, we already went over this. They're changing the definition of a primary listing market to mean the one that's been listed the longest, and they're doing this to avoid conflict in duly listed securities. Now, why would they be expecting conflict? I don't know. Maybe due to the Archegos collapse anniversary that's coming up tied to China books? I don't know. Anyways, second definition they're going to be changing is the extraordinary market activity. Now, the current 3-part test in this is as follows. The sole example of such activity included in the rule is the execution of a series of transactions for a significant dollar value at prices substantially unrelated to the current market for the security. 2, the exchange must determine that such extraordinary market activity is likely to have a material effect on the market for the security. And 3, the exchange believes that either such activity is caused by the misuse, malfunction of electronic quotation, communication, reporting, or execution system operated by or linked to the exchange. Same thing, operated by or linked to the National Securities Exchange other than NASDAQ, and the same thing operated by FINRA linked to a FINRA facility or electronic quotation system or execution system linked to FINRA. Those are the current three-part tests for establishing extraordinary market activity. They're going to be adding 2 additional scenarios to provide additional transparency. Those 2 scenarios are Scenario 1, duplicative or erroneous quoting, order trade reporting, or other related message traffic between one or more trading centers or their members. 2, the unavailability of quoting, order, or transaction information or regulatory messages for a sustained period. Proposed Rule 4120C2 is going to basically give discretion to the exchange to impose an operational halt in a security listed on NASDAQ when a primary listing market imposes an operational halt in a security that is a derivative or component of the NASDAQ listed security. Proposed Rule 4120C would also authorize the exchange to implement an operational halt for any security trading on NASDAQ, including a security listed elsewhere, in 2 scenarios. 1, if it is experiencing extraordinary market activity on NASDAQ, or 2, when otherwise necessary to maintain a fair and orderly market or in the public interest. Proposed Rule 4120C2 provides the process for initiating an operational halt. Under the proposed rule, the exchange must notify the SIP if it has concerns about its ability to collect and transmit quotation information or transaction reports, or if it has declared an operational halt or suspension of trading in one or more eligible security pursuant to the procedures adopted by the operating committee. Proposed Rule 4120C3 provides the exchange would resume trading when it determines that trading may resume in a fair and orderly manner consistent with the rules. Proposed Rule 4120C3 includes one change from the current rule. Under the current rule, the halt cross process is used to resume trading after all halts in NASDAQ listed securities, whether the halt is regulatory or operational. The exchange is proposing to modify this process for an operational halt to give the exchange discretion to open trading without a halt cross if it determines such action to be in the best interests of the market. Wait, the best interests of the market? You mean the investors? Maybe it was a typo. Anyways, as discussed, and this is the in essence one, in essence, as discussed in this rule, the exchange believes that the various provisions of the proposed rules that it will apply to all SROs are focused on the type of cross-market event where a consistent approach will assist market participants and reduce confusion during a crisis. Because market participants often trade the same security across multiple venues and trade securities listed on different exchanges as part of a common strategy, the exchange believes that the proposed rules will lessen the risk that market participants holding a basket of securities will have to deal with divergent outcomes depending on where the securities are listed or traded. Conversely, the proposed rules would still allow individual SROs to react differently to events that impact various securities or markets in different ways. So, basically, cross-market event, crisis, basket of securities, dually listed securities, repo market, coming down soon, rates raising. What's going to happen? I know, I've been saying it for the last 3 months. Not AMC GME, that's next year. Still bullish on that. But this year, yin-yang time, baby. Let's go.